the Mill Social Talk podcast. Today we have financial. It's all financial today, right?
Yep. We're talking about finance.
So we're talking about finance and how to get your credit better. We're talking about how to get, if you got to pay your mortgage or if you're behind, how to get some free money. So we're talking about how that connects with the IDA program. So it's just a matter of, and we talk about credit.
We're going to talk about products, the Bond Bank
Products,
what products we have here to help out with your credit to either build or rebuild your credit.
So we have a great program on today, and again, I am Leroy from the Mills Social Talk podcast, managing broker for Mills Realty. We have Gabby, as you guys we've all been in the program before.
Yes, we have.
Gabby,
This is our third time.
Yeah.
Oh, nice.
Annemarie and Karen, and they're from the Journey Forward. I'm gonna tell you, if you're having issues, you got to call the Journey Forward. They're a great organization. You can actually go back to the podcast and you can look for Annemarie and Karen, and you can see what we have done. You can kind of just check them out. They have a great program. If you have issues with your credit, trying to get a home, it's just all good. So I'm not going to talk much. I'm just going to let Annemarie and tell me what you guys want to talk about, and we'll just kind of have a conversation, guys. Listen, this program, you got to get it to anyone who's trying to buy a home, who's looking for a home. Wouldn't that they call Gabby, and if they're not ready, Gabby will turn them over to Annemarie. Or call me if I'll get them to one of you guys, but you gotta call us if you're looking to buy a home before you even start buying a home.
That's right.
So let's talk, and Annemarie, let's tell me about what you wanna let everybody know.
Okay, well, let me just introduce myself first. I'm Annemarie Fitzpatrick. I'm with the Journey Forward. We are a HUD certified financial and housing counseling agency, and I'm with my wonderful colleague Karen Walsh, who is the development director for the Journey Forward. And I know I speak for both of us when I say we're just delighted to be here. Yes. We thank Mills Realty as well as Devon Bank for inviting us back, because today's topic is credit. And I think everybody can relate to the topic of credit, whether it's something that you're trying to build or you're trying to address issues that you may be having. That's our topic today. So the Journey Forward, we provide a very robust menu of financial education, and we have 2 workshops that are dedicated to the topic of credit. The first is understanding credit in your credit report, and the second is making smart credit choices and managing debt. Because we know that whatever financial goal you have, certainly your credit is going to play into the evaluation that a lender or creditor is going to use to assess your readiness in terms of buying a home, or even getting a loan for a car, or even a credit card, or getting a cell phone contract, renting an apartment. Your credit is involved in all of that. So we're going to talk about the role that credit plays in our lives, not just for purchases, which we know that credit with purchasing power is incredibly important, but credit even goes further than that when you're looking for a job.
I was going to say that, right? Even for employment now. Yes.
That's right. Some employers can pull your credit report. Where you're going to live. Of course, a landlord or a mortgage lender is going to be interested in pulling your credit report. So credit has far-reaching effects on what we pay for our insurance products, our cell phone contracts. So it's a great topic. Thank you for bringing it.
I think it's a fabulous topic, and some people, and we'll get into understanding your credit and why you should. You gave already tips on why you should have good credit. But I want to continue. Karen is your right hand
director. Oh, my right hand person for sure.
And director.
Right?
Yes.
And director of development at the Journey Forward. And I'm sure Karen will have a lot to say. And of course, Gabby. Gabby is my partner over at Devon Bank. So guys, as we move forward, Gabby, you'll be talking about
some products of Devon Bank, tools to build and rebuild credit. And just before I forget that, speaking about credit, right? I'm going to talk about the products that we have here, but also credit affects, like Annemarie was saying, there's so many things, but including your interest rate.
Right.
Not only the interest rate for your home, but the interest rate for your car. And I know that we went, we'll go into a little bit more. So,
yeah.
Go ahead, Annemarie.
So Annemarie, we'll let you take it, and we'll just kind of let us know exactly what
Okay.
you what you want to talk about.
All right.
Actually,
Okay.
I'm going to ask a quick question.
Okay.
Oh, okay. Well, of course, you're going to ask a question, right?
So let's say I go into the journey forward. My ultimate goal is to purchase a home in the future. I don't have credit. I don't have bad credit. I just don't have enough credit. If it's okay, I'd like to talk about that scenario because we have that, right?
Yep.
Yeah,
have
we
some,
do.
some
Yeah.
people that are looking to
Invisible.
purchase and
Yeah.
they just don't have enough credit.
Right.
And then we have somebody that maybe did bad choices in the past,
Right.
and now is looking to repair or, work on their credit.
Okay.
So if you can talk to us about those two scenarios.
Okay.
Keep that thought. I just want to ask one question, a yes or no. Hold on, because based on her what she's her scenario, I'm gonna ask a question: is no credit better than bad credit?
Well, they're both not good. Let's just put it that way.
Yeah.
And I'll tell you, when you have no credit, we call it credit invisible. And what we will do at the Journey Forward is we will help you, number one, try to access credit products that can help you get that reporting to Equifax, Experian, and TransUnion, who are the 3 credit bureaus, so that you can start to establish a credit history. Gabby already referenced one such product, which Devon Bank has, which is a secured credit card. And this is a wonderful tool for people who are experiencing credit invisibility. And these, this is something that is very near and dear to my heart, because many people who are credit invisible are people who have been renting and have never missed their payment, pay their payment every month on the first of the month on time and as agreed. Same thing with their cell phone contracts, same thing with their utilities. But what you need to know is that certain things are not reported to the credit bureaus. So you might manage your money beautifully, but the things that you're paying on time and as agreed are not reported to Equifax, Experian, and TransUnion. And that's where these secured credit products can really come into play, where you do get that reporting, where you have an open, active account, and ideally you'd have more than one that is reported to Equifax, Experian, and TransUnion that shows not only are you using it, you're paying it on time, and you're honoring all the commitments that come with that particular financial contract. So, that's credit invisible, and we do help people. There are other ways that you can start to establish a credit profile. There's Experian Boost, where you can give access to your bank account, where they start to report your rental payment that's paid on time, your utilities, your cell phone bill, and that starts to build a history. And that's what any lender or creditor, whether they're a mortgage lender, whether they're a credit card company, their Visa, whether they're your insurance company, they want to know what kind of risk you present. And in order for them to do that assessment, they pull your credit report. And if that credit report comes either invisible, where, there's nothing reported, or there's negative, like you said, maybe there's some charge-offs or collections, that informs whoever is pulling that credit report, whether it's your insurance company, your cell phone company, a mortgage lender, a credit card company, or Kohl's department store. Whoever is trying to assess your credit worthiness, they look at this report and they make their decision on whether they're going to provide you that credit product. Not only do they make that decision whether you're going to get it yes or no, but at what interest rate. If you present more of a risk, then you're going to pay a much higher interest rate. If you have a very solid credit profile, maybe your credit score is 750, you've got 3 open active trade lines, and you have no negative, what they call derogatory reporting, well, you're going to get a beautiful interest rate, because guess what? They want you. You're the kind of customer that somebody wants. And that's what today's conversation's about. How do we become that person that creditors and lenders see as an ideal person to be one of their patrons? And we're going to talk about those strategies. We're going to talk about the factors of a credit score. We're going to talk about the 2 most important things you can do to make sure that you have a strong credit profile. And the first thing is, pay your bills on time. That is the most important factor of your credit score. It's 35% of your credit score.
It is. Yes. Some of us just don't get around to doing it.
Well, this is the thing. I'm so glad you said
We
that.
don't get around to doing it.
I'm going to tell you, I'm so glad he said that because I work with so many people who it's not because they don't have the money.
No.
It's not because they were strapped. It's because they're not organized.
Right.
Yeah.
They do not have their financial plan. And when you meet with the Journey Forward, the first thing we're going to do is help you put together a budget so that you know several things. Number one, how much money is coming into your home? What is your net monthly income? Number two, you're going to know what are your financial obligations and when are they due? And we're going to help you put together a budget so that not only do you will know exactly who you owe money to every month, but when those bills are due. So that you are never ever paying a bill late. Because I work with people all the time who are like, oh, you know what, I just forgot.
You forgot, yeah. You
And
do.
guess what? You know, that once a bill is 30 days late, that's a hit on your credit
Yeah,
profile.
it's a hit.
It's reported to Equifax, Experian, and TransUnion, the 3 credit bureaus, and that is the most damaging thing you can do to your credit report. The second most important factor, so we already talked about the first, pay your bills on time. Get organized. If you need help with this, we can help you. We can be your accountability partner. Sounds like you and I need an appointment.
You know.
We do sometimes. We do and sometimes, no, not that I don't have the money. Yeah, you
Right.
feel like, oh,
Exactly.
It's due.
Life
It's
happens.
due.
Life
Life
happens.
happens.
Yeah.
But I'll tell you, when you have your plan, and I tell people this all the time, to me, when you have your plan, and when I say plan, it's your budget, it's a gift to yourself. There is nothing, at least in my opinion, that causes more anxiety than financial anxiety. Than wondering, how am I going to pay my bills? Did I pay that bill? That organization is a gift to yourself. And let me tell you, when you make that organization the culture in your household, it's something everybody feels. Because when there is financial anxiety in a home, you're not the only one feeling it. Your children are feeling it. The number one stressor in relationships is financial stress. It permeates every corner of your life, and it's so not worth it. Get your plan together, get organized, and I promise you, it's a gift not just to you, but to everybody in the household. So the first factor and biggest factor of your credit score, 35% of your credit score, is do you pay your bills on time? The second most important factor is how much revolving debt you're carrying. That's credit card debt. That's credit card debt. So here's the rule of thumb, my friends. Let's say you have a Visa credit card with a $1,000 credit limit. In order for your credit score to stay where it is, you would never carry more than 30% of your available credit line. So 30% of $1,000 is $300. So if you want your score to stay the same, you would carry a balance of $300 and no more from month to month.
You know, that's amazing because a lot of people don't know that.
Nobody knows it. We don't
What
learn
if you had
this.
more than one card? Is that each card or
No,
is it cumulative?
great question. So Karen asked a question, and this is about utilization. So we talked about one Visa in that first scenario. Let me finish with that scenario, and then I want to talk about what Karen's talking about. So if you weren't looking to improve your credit score, and who's that? Because I think we all are
We all
looking
do,
to
yeah.
improve. You would never have more than $300 balance. But if you wanted to improve your credit profile, you would never use as much as 30%. And if you want that magic credit fairy dust, you would use your credit card every month and you'd pay it off in full. Use your credit card and pay it off in full. That is, and wait till you get the bill, because you want that reporting, you pay it off in full. Some people believe wrongly that in order to improve your credit score, you need to carry a balance. 100%
Right.
wrong.
Right.
That is not true. You do need to use it. You get that bill, you pay it off in full. For most of us, sometimes you can't pay it off in full. Again, life
Yeah,
happens.
yeah.
But what you want to do is be aware of what is that 30% utilization. Now, Karen asked a very smart question. Annemarie, are they only looking at that one credit card? No. Your creditors are looking at all your credit availability. So let's say you have 3 credit cards. And across all three, you have $10,000 of available credit. Maybe one credit card, you have a $5,000 credit availability. Another one, you have $3,000. Another one, you have $2,000. So you have $10,000 of available credit. You maybe, on one of those credit cards, the $5,000 credit availability, it has a 0% interest for the first 18 months. And you're doing something big in your home. Well, because you have these other 2 credit cards that make up the other $5,000, you decide you're going to use this one because there's 0% interest rate, and you're redoing your kitchen. So you charge $5,000, or let's say $3,000 on that credit card. Now we know that $3,000 is more than 30% of $5,000. But because you have these other credit cards open with a 0 balance, your total credit utilization across all of your available credit is $3,000, and that's 30% of your $10,000 availability.
I did not
Yes.
know.
Do you get that?
Yes.
Do you,
Yes.
okay,
Yes.
did I make that clear?
That was
Yeah.
very clear.
Yeah.
That
Good,
was very clear.
because our
Yeah.
creditors
'Cause
aren't
I
looking
had
at
the
us.
intention. I had the what you thought about maybe on each credit card it has
Right,
to be.
I was thinking
I thought
each
so, too.
individual
Was
card.
it-
but-
yeah.
I thought so too.
Right.
Right,
I
no,
had the same thought that.
I had
the same thought.
It's like, yeah.
right.
But didn't so that was very clear.
Right.
The overall credit.
And I wanna share another quick scenario for somebody who is just starting off building credit, right? So let's say somebody that is looking to build credit may not have that credit availability of
Right.
$10,000, right? So a lot of times you really, in reality, you start off with 500
Exactly.
or 600 at your limit.
Exactly.
And you're thinking, oh, well, I'll just pay it off because I know I'm going to have the money. Let's say you have a limit of $600 and you're saying, well, I'm going to do groceries and I'm going to put gas and I'll pay it off. I will have the $300. But you're already at 50%.
Right.
Since it's your only card and it's your limit is 600. So why not hold off on using that? Maybe just use it this is what I say, just use it for gas money. Do not use it for anything else until you start building that credit.
Right.
Because once the creditors see that you're spending less and you're paying it off,
Right.
then you're starting to get
You're
more
building
offers,
credit. You're building credibility around the way you manage your money.
and you're getting offers with higher limits. Am I correct?
Yes,
Correct.
you are.
Okay. All right.
But
just
there was
a
a
little
train of
tip in
thought.
there.
There was a train of thought that I'm gonna say years ago, whereas same scenario where you don't have any credit, you have 0 credit. Now you have a credit card of $600. You pay the minimum.
Right.
If you use small amount, you pay the minimum of $25 or whatever they charge you. Is that train of thought no more effective? That instead of paying off that $250 that you owe, you say you're going to pay a consistent amount to build that credit?
Number one, you always want to pay more than the minimum amount that a credit card is requiring. Because when you pay just the minimum, that is going, the vast majority is going to the interest that's attached to that card. Let's say your minimum payment is $25 and you pay $35. You know that $10 in excess of the minimum is going to actually what you owe.
Yeah.
If we only pay the minimums, because credit card companies are very smart. In the old days, they used to charge a minimum payment anywhere from 2 to 5% of your current balance. That's why your minimum payment changes from month to month, because your balance changes, right? Well, guess what credit card companies charge now? 1 to 3%, closer to the 1%. Why? Because it's to their advantage to keep us in debt forever. If you pay the minimum amount, from today to the end of your days, my friend, you will never get to the principal, to what you actually owe. And that is to the credit card company's advantage. Knowledge is power. We need to be savvy consumers. And we need to be very smart when we're using our credit products. When I talked about our friend who had 3 separate credit cards, and they knew that one had 0% interest for 18 months, weren't they smart? You had better know what your credit card interest rate is for each credit product you have.
Yeah.
And here's the thing. Don't, you might think, oh, you know what, I have this credit card, I got it when I first graduated, it's a Discover, and it's 28% interest, which, terrible. But the thing of it is, you still want to keep that open. You still want to keep it active. Use it once a month for your gas. You pay it off. Because that Discover, maybe that has the $3,000 credit limit that is keeping your utilization in the healthy range. Not only do you want to keep it open for that, because once you close that Discover, you lose $3,000 that expanded your utilization, that allowed you to charge that $3,000 for your kitchen rehab. You keep it open, you keep it active. Also, why would you close a card that maybe you had for 10 years? You've got all that beautiful history of paying on time and as agreed. Keep it open, use it once a month, buy a tank of gas, pay it off. You get that beautiful reporting to Equifax, Experian, and TransUnion, and you're doing a good job.
And how about somebody in that same scenario, Marie, that says, but you know what, I have 12 credit cards.
Okay, that's too many.
my gosh.
Yeah, that's too many. That's
Yeah.
too many. If you go to sit down and your wallet's this thick, you got a problem.
Yeah.
Yeah, no, that's too many. But I think what we need to talk about first are inquiries. An inquiry
But
is...
before you say that, just follow up on just that question. How many credit cards do you think someone should have? At least specialists. What's your thoughts?
I would say, in my opinion, 3. I think 3 is plenty. But this is the thing, I even hesitate to say that because these credit card companies, they're so savvy and they give you, maybe you're someone who wants to travel and you get miles on this one.
Yeah.
Maybe you're someone who's getting a rebate and you only pay for groceries on this one.
Yeah.
This is when I say get to know your credit product and take advantage of it. 12 no matter what is too many in my opinion.
But so I have a confession.
Uh-oh.
Here.
Oh, you got 12.
I didn't know that.
Oh.
I just recently did another, I checked my credit and I said, but wait a minute. And I don't use them.
Right.
I use 4 of them.
Are they store credit cards, a lot of them?
A few of them were store credit cards.
Okay.
So I started, and then some of them were actually recent. So I said, you know what, these recent ones, I don't use them. I'm going to start closing them. So little by little, I'm getting rid of that.
Right.
To me, is having too much exposure.
Exactly.
Right.
Then it's the theft.
So then, and the 4 that I constantly use have more than enough credit.
Right.
So I don't want to have these other store credit, store credit cards open for what?
Right.
I'm okay.
Go ahead.
Because there used to be that line of thinking that you should never close your credit
Right.
cards because it would damage your credit.
Right.
That
It will, and it does.
And it
Whenever you close an account, it but you'll bounce back.
Right.
Because of the utilization.
Right.
So, number one, store credit cards are the most punitive cards out there. They historically have the highest interest rates. Oftentimes they'll close your account if you don't use it within a year.
Yeah.
But for a lot of the folks that I work with who are struggling to get a credit profile established, sometimes they start with the store credit card because that's all they can get. Whether it's Kohl's or one of the, and that's okay.
Yeah, right,
that's not a problem. But the thing of it is, you want to know your credit product. What is the interest rate? I actually, a young woman, she recently opened a Kohl's credit card. She has a brand new baby, and I said, you know what? If you're going to use it, this is you need to be open and active because, like you said, in order to get that reporting, you have to have something to be attractive to the mainstreams, like the Discovers, the Visas, etc. So, and I said, buy something for your baby once a month, pay it off in full.
Right.
And she's been doing it, and she's doing a great job. But we all have got to start somewhere.
Right. Yeah.
But please know that every time you apply for credit, it is an inquiry. It's a hard pull. And it can shave 10 to 20 points off your credit score every time you apply. Whether you get the credit or not. You might be standing at that Kohl's checkout and they say, hey, if you open a Kohl's credit card today, you could save 20% on your order. And you think, well, why not? Yeah. And here's the thing. If you're an avid Kohl's shopper and if you're going to really use that Kohl's cash to your advantage, go ahead and do it. Yeah. You're going to have a hard pull. Your score's going to take a little dip, but you'll bounce back.
Right.
But if you're only doing it to get that 20% off, that's kind of a waste of an inquiry.
And then you don't really shop there.
Exactly.
twice
Right.
a year or something like that, there's
Right.
no benefit to
And when
that.
you say it'll bounce back, I mean, I know that there's no like magic formula,
Right.
but if you used your cards responsibly,
Right.
how long does that?
Within months, like
Within
3
months,
months.
not years,
Yes,
but
no,
months.
not
But I'm,
years.
but I'm thinking like,
Absolutely not.
let's say with the case of Gabby, she have credit.
Mhm.
You have established credit in many years. So I think
Right.
if you decide to close 8 of those cards, yeah, he'll hit, but it's not like you're,
No,
she's
you're going to be
behind.
just fine.
You'll
And
be
to
just
your
fine.
point, it leaves you less exposed to
Yeah.
identity
Right.
theft,
Yes.
fraud, and all of that.
Yeah.
One other thing about the inquiries. They impact your credit score for the first 12 months. They're only on your report for 24 months. If you have multiple inquiries in too short of a time, it is definitely going to be a negative on your credit report. And, speaking of credit and the importance of credit, we know that when you want to become a homeowner and you're working with Mills Realty, you definitely want to be in that strong credit position so that you are attractive to a lender like Devon Bank. It's very important that you know what your position is before you even start that process, and that's where we, the Journey Forward, come in. And I do want to mention that we're very active with a grant right now through the Illinois Housing Development Authority, commonly referred to as IDA, for the Illinois Homeowner Assistance Fund grant, ILHAF. Government loves their acronyms. This is a foreclosure prevention grant. When you hear grant, that's free money. If
Yep.
anybody listening is behind on their mortgage, their property taxes, their homeowner's insurance, there is a grant for up to $60,000 of grant assistance to get you current. Please make sure that you contact the Journey Forward. Our phone number is 312-429-5945. Again, 312-429-5945. Please know that we are here. It would be our pleasure to assist you to apply for this grant. And it's a process, but we can help you not only with the application, but do the required housing counseling that IDA requires in order for you to get this grant.
I just want you to confirm that we've actually have someone in that program and they've gotten approved
I'm so
for the
glad.
grant. So
Yes.
actually,
What it's there for.
we went
It's
ahead
fantastic.
and forwarded to them. They went ahead and applied,
Mm-hmm.
and so we're just gonna wait for the check to show up.
Yes,
You know what I'm
yes.
saying? And
Thank God.
we've called and they said that actually we should have the check hopefully this week.
Good, because they have very
Yeah.
prescribed disbursements. IDA does for those checks when people are approved.
And it's I'm so
Yeah,
sorry.
go.
And if you have a doubt, still ask. We were talking off camera that I wanted to understand if somebody that currently has a mortgage and they're escrowing their taxes and the insurance.
Yes.
And quick example, somebody that went from a payment of $1,700 to $2,200, $400 higher. They can still call and see if they qualify for this program.
Right, you do have to be at least 30 days behind on your mortgage to get when you have a mortgage, to get the property tax and homeowner's insurance assistance, which is escrowed, as Gabby said. And if you're mortgage free, maybe you're one of our seniors who's listening, or maybe you're just somebody young and done really well and you're mortgage free, you can get assistance on your property taxes if you have fallen behind.
So what we'll do, we still have not, we're like halfway. I'm thinking, so guess what guys, there's still a lot of information to get out. So why don't you guys come back next week and we'll continue this conversation. We'll continue with the Journey Forward and Devon Bank. We'll continue, but for time's sake, let's come back next week. Tune in next week. Again, this is the Middle Social Talk podcast, and you'll get the rest of the conversation. All right, so again, Karen, Annemarie,
Gabby.
and Miss Gabby. Again, this is Middle Social Talk podcast. Come back next week. We'll give you the rest. But this is too vital of information to not to give you the whole story. So I hope you tune in next week. Again, until the next podcast. See you then.